Welcome back to Intibles, everyone. So I'm going to go with you guys in the S&P 500. Again, this is the SPY. Again, getting a pullback after having a momentum candle to the downside. Again, having CPI coming out on Tuesday, a little bit higher than we expected, lower than prior, however, higher than we did have expectations at 8.1. Again, coming out at 8.3. Getting this large momentum candle to the downside. And as you guys can see, getting a doji candle, an indecisive candle coming out yesterday, looking to see if we were going to continue on higher with this indecisiveness or possibly continue on lower, since we did already have a bounce on our support level here. What exactly are we looking for here as a possible continuation on lower, and what exactly has to happen for us to bounce back here? I'm going to go over exactly what we're looking for here. Again, a lot of this has to do with anticipation leading into Fed rate hikes next Wednesday, so I'm going to go over exactly what we're looking for here. Now, before I jump into this, if you guys can do me a huge favor, smash that like button, hit subscribe if you want to see more chart updates on potential breakouts that I mention every single day throughout the week. Now, before I jump into this, if you guys can do me a huge favor, smash that like button, hit subscribe if you want to see more chart updates or market updates that I mention every single day throughout the week. And if you are a day trader or you are looking for very volatile breakouts, if you guys did see 𝐒𝐭𝐨, for example, we had a sympathy with AMTD out the gate today, a very nice 10 to 15% play. Even if you were late to that play, a very nice play that we had in the Intibles room, and also did mention them yesterday on a major run. Again, very volatile major breakouts that we mention every single day in the Intibles room. Go to intibles.com in the description below, and you will never miss a breakout alert today again. So jumping into the daily chart with you guys here on the SPY, again, we are following a momentum candle to the downside after CPI. Again, CPI coming out at 8.3. Our expectation was at 8.1, coming out slightly above, however, lower than prior, and we did have this momentum candle to the downside. And then we did have our doji candle coming out next, again, our indecisive candle, and as you guys can see, a slight pullback here on the day as we are getting a rejection just below our 20-day moving average. Our question is, are we going to continue on with that rejection, since we do have our 20 crossing below our 50? And then we also do have our EMA lines here on our MACD that is crossing down, showing us that strength to the downside. So again, that could be that larger reaction to the downside. If we do continue on with this strength to the downside, I definitely would be careful going into tomorrow. Again, making sure we can hold 388, or else we could possibly continue on lower if we increase in volume and we do get that continuation on lower. However, if we are looking for a bounce here, what we are looking for again is for those white shaded lines to come in, our decrease in sell pressure here. As you guys can see, we did have that continuation on decreases in sell pressure recently. We had a slight bounce, again, a quick gap up, and then we did gap back down as we did have that slight pullback taken away. A lot of what the market expected leading into CPI with that larger decrease in CPI, getting that increase in sell pressure. Now looking to see if we can again get those white shaded lines like we did prior at this point. So again, looking for white shaded lines to continue to come in here, so that way we do get that confirmation on that decrease in sell pressure to the downside, and then looking for our EMA lines to possibly cross back up from there is exactly what we're looking for to get that strength. Again, continuing on above the median of our MACD is what we're looking for to get that ultimate strength. Again, getting that strength is extremely key. As you guys can see, we had the largest rally of the year here that we did have, breaking above the median of our MACD, and as you guys can see, sure enough, did have that strength. Looking for the same thing here, just simply looking for our decreases in sell pressure. If we do need to continue on lower here, this is exactly what we're looking for. So if we do continue on lower here with our 20 below our 50, and we do continue on with this rejection, again, getting our wick to the upside here, if we continue on with this rejection, where exactly may we be headed next? As you guys can see, we have a prior support here at 380 that we would be looking to see if we can hold. Again, 380 is a very key point that we did respect prior, and then we did continue on above 390, and then did continue on our rally. Again, that was after our bullish divergence that we mentioned previously, and if we do not hold 380, then in my opinion, we could easily, after this major bounce and then having a gap up and then gap down here, again, if we continue on with this rejection and we do continue on with this momentum to the downside, then we can easily have a larger reaction to the downside. So we are going to be careful. Now, again, all of our momentum at this point, since we did have CPI at 8.3, has to do with what we are anticipating leading into Fed rate hikes next Wednesday. We have a possible 100-point base rate hike or a 75-point base rate hike, and that is what the market is trying to price in at this point in time. Again, if we have a major gap down, then you can assume that the market is trying to price in a 100-point base rate hike leading into Wednesday's Fed rate hike. So we'll see exactly what happens here. But again, a very strong support that we could have a major reaction to the downside from. I definitely would be careful. And as you guys can see on the RSI, if we were looking for a possible room to run, as you guys can see, we are not oversold yet. We do have room to run to the downside if we wanted to continue on lower here, jump into oversold territory, and then possibly look for those bullish divergence again for that reversal. That is what we'd be looking for if we did continue on lower, looking for that strength to the upside. Now, as far as compression and decompression, are we decompressing to the downside? Are we going to get that squeeze to the downside? As you guys can see in our Bollinger Bands, we are not pushing into our second deviation. Again, we did mention that we were getting that rejection to the lower end of our second deviation with that engulfing candle here. And sure enough, we did get that continuation on that bounce. Now getting a gap down, dropping below the median of our Bollinger Band here with that gap down from CPI, and then looking to see if we can bounce back here. If we cannot bounce back again, if we do get that momentum candle and continuation on lower here, that could be that continuation on into the lower end of our second deviation, and that could be that squeeze and continuation on lower here. So again, that's what we're making sure we are careful from, again, because we could have that stronger move to the downside. Now again, with that said, if you are a day trader or you are looking for very volatile breakouts that we mention every single day throughout the week, go to instables.com in the description below, and you will never miss a breakout alert the day again. And all of you instables that come over every single day and support the channel, I appreciate every one of you guys. We're going to continue to go at it, stay patient, take what the market gives us as always. Again, nice breakouts today. As long as we do stay consistent, play stop losses, and making sure we are just staying green is what we're going to continue to focus on in the instables room. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in pre-market.